And this, my friends, is why you do not buy puts on AMC stock. It can look like a terrible day. You could have a terrible catalyst coming tomorrow with CPI. You could load up on puts and the stock ends the day on a positive note. Ladies and gentlemen, we're not even quite till the end of the day, but it does not even fucking matter unless the markets tank into the ground. AMC stock's down 3 to 5% by the close, and that's not exactly going to happen. I got some real estate stuff I got to take care of, but we got some things to talk about, ladies and gentlemen, so get jacked up. Tomorrow is going to be a very important day, and I think we're going to see a wild bounce in AMC stock, and now is my personal opinion favorite time to buy AMC stock and buy the dip. Look at this explosive move that we are seeing, almost up 2% heading into the close. This is a very positive sign, but we got a lot to talk about, ladies and gentlemen. Hit that like button, smash, tickle, tap, touch, or smash the like button. Subscribe to the channel, comment down below any of your comments, questions, or concerns, but most importantly, come join us on the live stream in between 10 and 11 p.m. Eastern Standard Time every single day, baby. We are in there like swimwear, answering questions, looking at futures, looking at news, talking about AMC, meme stocks, different trades and strategies. You definitely want to be a part of it. Now, let's get into exactly what is going on with AMC stock today, up almost 2%. What is going on in the overall markets here today? The Dow is down 0.60%, S&P down 1.08%, Nasdaq down 1.5%. Now, this down move is just enough of a down move to kind of start to price in higher CPI. And like we talked about in the last video, if you guys have not seen that, take your ass back and go watch the other video as well, possibly after this one. Doesn't matter what order you watch them in, but CPI is expected to be high. It's expected to be high, so it has to come in substantially higher than the highest expectation to be a real shocker, like, wow, this is really getting out of hand, right? Inflation is already out of hand. How much more out of hand is it going to get? We're already there, right? So we've already priced that in. So odds are, I would say with about 70-80% probability, the markets have priced in, hey, we're going to get high CPI. We're going to expect that. You know, if it comes in on expectations, the markets are actually going to rally on that. Or if it comes in under expectations, goes without saying, the markets are going to rally off of that. Now, the expectation, if you guys have not watched the last video, you motherfuckers, the expectation is about 0.5% month over month inflation gain. So if that comes out, 0.5% month over month inflation gain, then the markets are going to rally off of that, because like the last analogy I said in the last video, if you got your paycheck, it came out on your expected dollar amount, you get $500 a week, it came out at $500, you're not going to feel any kind of way about that, right? You might be happy you got paid, right? If it comes in higher than expected, which would be like CPI coming in lower, right? If you got a higher paycheck, you'd be happy about that. You'd be happy about that. So will the markets be if CPI comes in lower than expected. So pretty interesting here, right? Interesting way to imagine that, and I think that's the best way to imagine it. Comes in at expectations, markets likely to be stable, if not rally. Comes in lower, the markets are gonna fucking tear. If it comes in higher than 0.5%, well, the markets are gonna get clippity. I can't do that fast, okay, but they're gonna come in, at expectations, my personal opinion, and the markets are going to tear off of that. We'll talk about it later on tonight on the live stream. We'll go over a lot more of the fine details that are involved here. We're going to look at the futures. That's going to be key. But by and large, I think it's going to be pretty positive, and that's the way that I'm setting up my portfolio, just like I was before the last Fed meeting that everybody thought it was going to be bearish. I'm like, no, it's priced in. It's going to be a bullish reaction. What happened since the Fed meeting? Well, you had one of the most historic rallies in the market that we have ever seen. So I think it's one of those moments yet again. Now, we do have more meat on the bone, but CPI is not going to cause that meat on the bone to really get shaved off, right? We could come down this week in the markets. Don't get me wrong. I'm talking about just tomorrow. But what is going to cause the markets to really come down? Likely not going to be CPI. If anything, it's going to be the bank earnings, which we have talked about many times. Just for a reiteration here, JP Morgan Chase & Co. Wednesday pre-market. BlackRock also Wednesday pre-market. First Republic Bank as well Wednesday pre-market. You do have Bed Bath & Beyond. That's going to be interesting to see how it affects AMC and GameStop as well. But that's going to be your precursor. JP Morgan, if they're bad, if First Republic is bad, if BlackRock potentially is bad, then that's going to give a sour taste in investors' mouth. If that's good, Wednesday probably going to be a positive day. And I don't care about the bank numbers. Fuck the bank numbers. Doesn't even matter. Investors don't care about that. What investors care about is what are the consumers doing? Consumer, 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 because the consumer is directly related to a recession. The markets, they care about the Fed and they care about a recession right now. They know inflation's high. Forget inflation. Doesn't even matter unless it shocks the markets, and it's not going to. I can almost say that with a guarantee. Now, what about the consumer? Come to your own conclusions. What do you see going on with the peers in your life? Are they cutting back? Are they not driving as much? Are they not going out to eat as much? Are they not going, to your local AMC theater as much? Are they not doing shit? And I think, honestly, you've seen some of that, but a lot of people have taxes right now, and a lot of people got taxes back, especially lower income earners. So there is a decent amount of money being spent out there. So that's what the markets are going to pay attention to. What's the consumer doing? What our bank account balance is looking like? Savings, checkings, we're going to get all of that. That's going to be important. Wednesday, that's going to be your precursor. Thursday is going to be the main meal, where you have Wells Fargo, Goldman Sachs, Citi, Morgan Stanley, PNC, Ally Bank, and Rite Aid, United Healthcare Group, TSMC as well. Those are not banks, but still want to put them in here, and as well as Ericsson if you guys are into those 5G plays, some futuristic shit. But nonetheless, I really don't have an opinion on the bank earnings. That's why I'm not going to trade the bank earnings beforehand. I will trade the after effect. And if you do get a bullish or a bearish move from the banks after, then that's going to be a more solid rally, because it's really all going to be based around how is the consumer doing. Are we risking the chance of a recession in 2022? The probability right now for a recession in 2022 is about 27%. So if that, if bank earnings are bad, consumers not doing so good, that's going to jump up to say maybe 40 or 45%. That's what is going to cause a more stable downward move or a more stable uptrend. It's really 50-50. We're in that weird zone here on the S&P 500. We're about $30 off of almost $40 off of our all-time high, and we're almost $40 off of our lows that we have seen for the year. So it's really 50-50. Be careful with your trades. Play shit small if you want to trade them. I'm usually a degenerate gambler when it comes to bank earnings, and they usually hit pretty damn well, but I really have no opinion there. So that's that. As far as what the markets are pricing in for the federal funds rate, the next meetings for the Fed, as you guys already do know, we've talked about this, the next 5 meetings as far as the Fed funds rate monitor tool is pricing in that 0.5% rate hike. Fed Evans did come out today and he said, yeah, it's highly likely we will get a 50 basis point rate hike, and the markets actually took a fat ass candle to the upside. So the markets, they don't really care about rate hikes. They don't really care about inflation all too much, as long as it stays not so much out of control, right? It's already out of control, but as long as it don't get worse. A lot of economists are pricing in that and talking about this is going to be the highest reading of inflation that we're going to get all year. If that turns out to be true, that's going to be a bullish thing for the markets. If there is greater reassurance there won't be a recession via the bank earnings, that's going to be also another bullish rally. I'm cool with it either way. The markets fall, the bond rates go up, the interest rates go up. That's all fine and dandy. It hurts the hedge funds. It makes it harder for them to remain in their short positions for a longer amount of time. So I'm really cool with this either way it goes. I'll take the short-term gains. I'll take the short-term pain into the longer-term gains. Baby, I hope you guys are jacked up and ready to go. Tomorrow is going to be a very, very important day. Now, what else do we got to cover here? The Stocko tracker data. This is important, but not as important. 245,000 calls that are out of the money. 10,000 calls that are in the money. As we have seen, it doesn't really matter how many calls that are on the option chain or just activity on the option chain in general. It's not going to move the stock around all too much, but what does is when the FOMO kicks in and people start to buy those weekly options, I never suggest or will never suggest to anyone. None of this is financial recommendation anyways, but never a good idea to buy weekly options, but people do because we like to make tendies and we don't want to wait for our tendies. We want them on good old Fridays. But nonetheless, let's talk about the Ortex data and then let's get into the technical outlook here. So for the day, what the hell? Am I tripping? Oh, I'm tripping. Ortex was tripping. Okay. I was like, what? They paid $0 for those? But hope you guys seen that. Now, anyways, the option activity, 12 orders totaling $1.41 million, positive order value of 50%. So it's pretty neutral. 50% positive, 50% negative, nothing too crazy there. 20.55% short interest of free float, 105.9 million shares that are sold short. Cost to borrow max, 6.56%. Utilization of 100% and days cover is sitting at 2.38. So nothing too crazy is moving around here. Staying pretty stable. Short's not really covering. Who knows what the actual short interest number is? Likely a lot higher than that, my friends. Now, let's talk about the technicals real quickly. AMC stock making another move to the upside, trying. Let's see if we can retest those highs. But we got some good news to go over, ladies and gentlemen. We are now back above the 50-day moving average. Another reason why you do not buy puts on AMC stock. Look at that, like magic, baby. 50-day moving average sitting at, we got to zoom this in. It's very close. We got to zoom it in. $18.34 per share. AMC is trading at $18.59 per share. We're like 30 cents above the 50-day moving average. This is a solid confirmation point, and I'm going to go ahead and buy a couple options before we do close the trading day, because if tomorrow is good, it's going to be really good. We're bouncing, man, that is wonderful. You guys doubt AMC. Some of you guys, it's a shame. It's a shame. You should never doubt our good old Amy. She likes to go for these random runs, so it's okay. It's all good. Now, if shit is bad tomorrow, if bank earnings are bad, consumer sentiment is bad, risk for an inflation goes up, all of that good stuff, then AMC could likely fall back down to about $15 per share. If everything is good, everything is fine, dandy, not worse than we are already expecting it to be, which our expectations for the economy are starting to get pretty damn bad. Inflation expectations, pretty damn bad. Earnings in general, starting to get revised to the downside in a substantial way by analysts. If that happens, you're going down to $15. If it's better than our expectations, then you're heading back up to, above 20. And the fact that we're above the 50-day moving average, if we can close, throughout the whole day, throughout after hours, until after hours closes above the 50-day moving average, that's solid confirmation. Solid confirmation. It don't get better than that. Bouncing off the 50-day moving average, that is a holy grail of support confirmation. So basically, that's going to be all for this video. I know I rambled a lot. I know I, talking all crazy in this video, but we are jacked up and we are ready to go. And I had a little bit too much caffeine today, but nonetheless, you guys get the point here in this video. The MACD is bearish. The RSI is on the oversold side, heading towards neutral, seeing a little bit of a bounce right there. Markets in general, going back down a little bit. AMC's not really playing along to the same extent. So basically, that's it. That's what you guys need to know. That is your cake and frosting wrapped up in a bow and placed in a video for you guys. So hit the like button, subscribe to the channel, come join us on the live stream. If you guys want to come trade with us live in real time, link down below in the pinned comment. Go ahead, follow me on Twitter as well, also linked in the pinned comment. Thank you for watching, and I'll see you in the next.